Hello everyone. US Treasury asks major banks if it should buy back bonds, Reuters just reported. This is a major warning for US financial market, and, unfortunately, it didn't get much coverage. We will talk about it, but first, let's set the context by examining what is going on with bond and currency markets around the world. We have a lot to talk about today. Big changes are happening right now and staying informed has never been more important. In my previous videos I was talking about bond and currency crisis in Japan. There is a new development in Japan's currency market that highlights the limitations of Bank of Japan, and we will talk about in a bit. I truly believe that Japan is a canary in a coal mine and a blueprint for what is to come in Europe and US shortly. Now we can see it unfolding in a real time in Europe, specifically in UK. CNN just published an article, Slow-Moving Car Crash. There's no quick fix for the UK market mess and it perfectly describes the situation. I believe we will see something similar here, in US, eventually. Japan is doing unlimited QE, buying bonds, while destroying its currency. UK just joined Japan buying UK bonds to suppress sovereign bond yields in attempt to bail out its pension system from collapse. Will we see something similar in US? Can this new development accelerate ongoing worldwide de-dollarization? Let's talk briefly about the situation in UK. Couple of weeks ago, UK's new Prime Minister rushed in with a sweeping tax and spending reform, plunging unprepared UK's financial market into the turmoil. It either shows how dangerous the situation is, or, maybe, a complete incompetence. Both scenarios are very worrisome, given the importance of UK's markets. Truss just fired her Finance Minister Kwarteng in an effort to mitigate the damage, after just a few weeks on the job. In a nutshell, they decided to deficit spend on some economic measures to jumpstart deflating economy. If any of our listeners from UK would like to comment about situation on the ground, please post it in the comments below, we would all appreciate it. As we all know, UK's current inflation is right around 10%, fiscal deficits are soaring, energy crisis is worsening and the currency hitting multi-year lows. As news about new government policies came out, investors decided they had enough, and rushed for the exits, putting pressure on British pound and causing a rout in UK bond market in the process. First, UK's mortgage market underwent a massive shock, with some lenders pulling lending products until the situation is resolved. Then the bigger problem appeared. Pension funds were borrowing at almost zero interest for years and redeploying these funds into UK government bond market to meet distribution requirements. The scheme worked, until UK's gilt started to crash, while Bank of England was rising cost of borrowing, leaving pension funds upside down. UK Central Bank had no choice but to step in and provide liquidity, so pension funds, and others, can offload their bonds at an acceptable price to avoid a complete collapse. Latest news indicate that UK extended unlimited buying to other bonds, like corporate and even junk bonds. This bond buyback is supposed to be a temporary measure ending on October 14, but even if it ends as promised, the damage is done. Balances will have to be reduced, British gilts will have to be sold at a huge loss, bailouts will have to go on. This pension drama and a bigger story is not over yet, we will see more in coming days. I guess we just have to learn to accept that business miscalculations are passed on to taxpayers. But I am digressing. Let me know in the comments whether you agree or disagree, I am curious to know what do you think on this subject. As I have predicted, basically, UK decided to use Japan's playbook and resorted to at least a temporary yield control to avoid a complete collapse of the bond market. This debacle in UK illustrates the reason Japan is capping its bond yields. They, unlike their counterparts in London, have foreseen the problem, and proactively froze yields to avoid a collapse of their highly leveraged financial system. Fun fact, Bank of Japan now owns over 60% of all 10-year government bonds. Talking about the level of distortion in the economy and a possibility of a huge problem down the line for Japan's currency. Also, it points out towards the trend in increase of central banks' balance sheets around the world, as I believe Japan is just an illustration of what is to come everywhere. I do not know how long Japan and UK can delay the inevitable. Maybe years, maybe months. But eventually it will break. Big test will be the upcoming winter. Once energy reserves are depleted, Japan, Europe, and possibly UK, will need some new tricks. Let's talk about a new stage in Japan's deepening crisis. Japan attempted to protect its currency from uncontrollable decline at a 145 yen to dollar level, by dumping $20 billion in a single-day intervention. They have succeeded to push it up to 142. But as of last Friday, market pushed past 145 level and reached over 148, aiming at 150 yen per dollar mark. It will further complicate things for Tokyo, as they price energy imports in US dollar. This shows that at some point, central banks are powerless to forestall the inevitable. Reality will catch up and the price will be paid. It's all about confidence. Once it's gone, investors will dump toxic currencies and assets and exit for something tangible. For now, it is US dollar, but what happens if US experience the same shock as UK? By the way, I am not looking forward to it, I am just telling you what I see developing right in front of our eyes. Japan might be in a better position than UK, Europe and maybe even US. Japan has massive reserves, and if not for the energy spike, they are cash flow positive. UK and Europe will have a very difficult near future ahead of them. UK and Europe have very little reserves, compared to what they will need to mitigate upcoming bond and currency turbulence. US has some gold reserves, but not nearly enough, compared to the total volume of US dollars in circulation. It is betting on US dollar status as a reserve currency to prop the market, and it might work, but the question is, for how long? Unless the whole world suddenly comes together and decides to embrace US dollar as it did in 1945. I will let you make your own projection about feasibility of that happening anytime soon. Now, if what happened in Japan, and now UK, happens in US, do you think it might affect US dollar as a reserve currency? I think it might. Can it happen in US? It's only a matter of time in my opinion. Let me know what do you think in the comments. Maybe I am missing something. Important thing to understand, is that Japan, UK, Europe, and US, are all use the same financial scheme and are a part of the same system. If one of the parts experiences a problem, the similar problem is very likely present itself in other parts. For decades, central banks were able to cooperate and keep the balance. Now we see some cracks in this cooperation. US has elections coming up, so it is a priority for the Fed to keep dollar strong at all costs, or US will suffer a major bump in domestic inflation. This causes major dislocations around the world. Japan's and UK's problems are, in big part, the consequence of Federal Reserve's selfish desire to prop US dollar. I am not even talking about the rest of the world. I think we will see a pause in the rate hikes right after elections. Federal Reserve, despite all the pressure to keep current administration in office, will have to get realistic about effect strong dollar has on the rest of the world. Pivot might lead to a major rally in precious metals, bond and stocks. But that projection might be overshadowed by a brewing trouble in US markets. Let's see what Reuters has to say about these problems. The US Treasury Department is asking primary dealers of US Treasuries whether the government should buy back some of its bonds to improve liquidity in the $24 trillion market. Liquidity in the world's largest bond market has deteriorated this year, partly because of rising volatility. As the Federal Reserve rapidly raises interest rates to bring down inflation, we have plenty of warnings flashing red. Bloomberg recently reported, the most powerful buyers in treasuries are all bailing at once. Fed, foreign governments, commercial banks all stepping back. More pain for bond investors may be in store amid buyer void. I do not want to go into all the details here, you can read these articles and explore this subject a bit more. I am not a financial advisor, so you will have to make your own conclusions, but I think the existing debt-based fiat system is at its end. This has a major consequence for US dollar as a reserve currency. Let's imagine for a moment. What if the current international financial system was based on UK pound as a reserve currency, and not the US dollar? Latest bond market fiasco would have been the end of it. Would you hold your sovereign reserve in a currency that has a major risk to its bond market? I think not. Let's put it simply. No liquid bond market, no reserve currency status. If something similar happens to USD, it would effectively end the US dollar as a reserve currency. I am not a financial advisor, this is my opinion only. But I strongly believe there is a very real risk of US dollar losing its reserve currency status. Let me know in the comments what do you think. Please subscribe and hit that like button if you want to see more on this topic. Thank you for watching, until next time.